make no friends in the pits and you take no prisoners. 1 minute you're up 500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Today's podcast is sponsored by ExpressVPN. ExpressVPN is an app that routes your internet connection through their secure servers so your ISP can't see the sites you visit. Go to expressvpn.com/gold and get an extra 3 months free. Today's podcast is also sponsored by Shopify. Shopify is a platform designed for anyone to sell anywhere, giving entrepreneurs like myself the resources once reserved for just big business. Sign up for a $1 per month trial at shopify.com/gold, all lowercase.
The Peter Schiff Show.
Well, the Trump trade continues to motor forward, led by the bond market. I think that's really the most significant market, and it's infecting other markets in a significant way. But the yield on the 10-year U.S. Treasury closed at 4.44. That's the highest it's been since Trump was elected. 30-year yields, people don't talk about those as much, but we're at 4.62. So we're now closer to 5% than 4%. You know, we were below 4 when the Fed cut rates by 50 basis points. What was that, just September? In fact, the Fed has now cut rates by 75 basis points, the Fed funds rate. The 10-year Treasury is up 75 basis points the other direction. So it's a 150 basis point swing between the Fed funds and the 10-year Treasury. This is the opposite of what the Fed had hoped. The purpose of the rate cuts was to bring down longer-term rates, too. They wanted relief to the housing market. They wanted to make buying homes cheaper, so they wanted mortgage rates to come down. The markets had believed that cutting rates would be good for the long end. After all, that's what happened with all the other rate cuts when the Fed kept cutting rates. In fact, when it went to zero during COVID, right, rates in the long end went to below 1%. Of course, the Fed was doing quantitative easing at the time. Now they're still doing quantitative tightening. In fact, I think the balance sheet just slipped below $7 trillion for the first time since they started doing quantitative tightening. But as I've been saying, without the Fed doing quantitative easing, long rates are going to keep rising. We're not even close to the end of this as the yield curve normalizes and actually ends up being steeper than normal due to the inflation trajectory and the debt. You know, the national debt today, for the first time ever, finally crossed $36 trillion. It may even be 37. We'll see by the time Trump takes the reins in late January. You know, it took 43 U.S. presidents 216 years to add the first 8.2 trillion to the national debt. Biden did it in under 4. His term isn't even over yet. He broke Trump's record. Trump held the record for the most increase in the national debt in a single term. He was at 7.8, and Biden has already passed him, and he's got a couple of more months to run up his record. Now, Biden's record is not safe. Trump is going to break it. There is no doubt in my mind that Trump will outdo Biden when it comes to running up the deficits in his second term. I think he could add so much debt that the national debt could be 50 trillion, right? If Trump starts out at 37 trillion, I bet he runs it up to 50 trillion, maybe a little bit more over the term. That is an enormous amount of debt, but that is where we are headed in the second term. Now, I guess if you pinned the Obama budgets on Biden, because after all, he was the VP for Obama. So Biden was in the White House really for 12 years, because Obama still has the record for the most amount of debt of any president because he actually served 2 terms. So he had twice as many years. But if you pin those on Biden, he's really unmatched because he's got all the Obama deficits, and then he's got his own deficits. So that's 12 years of reckless spending. But we'll see. I think that Donald Trump, in his 2 years, which is this current term and his first term, I think those 8 years will outdo the 12 years of Obama and Biden. But with the upward pressure on interest rates from these deficits and from inflation, and we got some more inflation news that came out today. I'll get into that later, but it was more bad news, meaning higher numbers. But all of this worked to push the yields on treasuries higher, and that caused the dollar, right? A strong dollar as a result of that. Dollar index had one of its best weeks in a long time. It closed at 106.8, up from just under 105 on the week. And gold dropped 2.3% on the week, continuing its post-Trump pullback, going below 2,600. Silver was down 1.4% on the week. Silver has been holding up better than gold during this sell-off, and it has been holding the $30. It did briefly trade below it, but it closed the week at about $30.18. Remember, I said that I thought $30 silver was like $2,000 gold, and I think that's kind of the support. And it certainly is looking like it because it's holding up with the gold sell-off. Of course, fool's gold, aka Bitcoin, went in the opposite direction. Bitcoin, I'm looking at the Bitcoin ETFs. They were up about 11% on the week. Bitcoin itself is trading above 90,000. In fact, I think it's above 91,000, almost 92,000. So this is record territory. Not yet record territory in gold terms, I don't think. I gotta do the math. Maybe I'll do that on the commercial break. But MicroStrategy up 13.5% on the week, continues to borrow money to buy Bitcoin. But look, Senator Loomis came out, and she's introducing, her bill for the U.S. government to buy Bitcoin, 1 million Bitcoin, and pay for it by selling gold. I mean, what an asinine trade to make on behalf of the American public. I mean, if this actually ever happened, if this bill was actually passed and signed into law, and the U.S. Treasury was actually dumb enough to sell off America's gold to buy 1 million Bitcoin, first of all, it would cost a lot more than they think, because that buying would drive the price of Bitcoin way up, which is exactly what the Bitcoin community wants in return for their support. After all, we helped elect you. We donated to your campaign. We voted for you. Now it's time to pay us, right? That was the quid pro quo. We helped put you into office, and you make us rich by sticking the American taxpayer with a pile of worthless Bitcoin. I mean, that would be the worst thing. Fortunately, I don't think that bill is ever going to make it to the president's desk, so he won't have to veto it. But I think if it did get to his desk, which is not going to happen, he would veto it. I don't think he's that bad. I don't think that he would really sell out his country to that degree. Sure, he'll take the Bitcoiner money to get elected, and he'll say what he needs to say to get their votes. That's par for the course in American politics. But when it comes down to it, he wouldn't do that to his country. He wouldn't do that to Americans. Imagine Americans who never bought any Bitcoin being the bag holders because the government buys it with their money, enriching a few people that bought these Bitcoins and were able to unload them on the U.S. taxpayer, who had no choice in the matter, right? He wasn't buying. It was some politicians that were spending other people's money to reward their campaign donors and voters. And I'm sure what would happen as the U.S. government was dumping Bitcoin, buying Bitcoin and selling gold, the Bitcoiners, especially the whales, would be selling the government their Bitcoin and then buying the gold that the government was selling from the government. They would be doing the opposite trade. They would be ringing the cash register with a big smile on their face, knowing that they were sticking the taxpayer with this, with this hot potato, whatever. Because when the government was finished buying, that would be it. I mean, it would crash. The stuff is so nonsensical. I put out a post on X. It's all sarcasm, right? I'm making fun of all this because there was another little company that came out. It's a penny stock. It was like 40, 50 cents a share. Total market cap of about 12 million or so, and it announced that it's going to be buying $120 million worth of Bitcoin. Well, how is this tiny little company going to buy $120 million worth of Bitcoin? The whole company's only worth 12 million. Well, it's going to sell stock and raise money and go buy Bitcoin. And what do you know? The stock more than doubled on the news, right? It was jumped up and up again after hours. Like, it's all insanity, right? It's now officially like the Bitcoin bubble. But anyway, so I decided to write this sarcastic post on X where I proposed a plan to save Social Security. Because I said, Social Security is insolvent. It's got, according to the government actuaries, it's got about a $23 trillion unfunded liability over the next 75 years. That's not even close to accurate. It's actually much higher than that. But if you believe the government's, fuzzy math, 23 trillion. I said, here's my plan. The U.S. Treasury has about, 2.7 trillion, or Social Security Trust Fund owns about 2.7 trillion of treasuries. I said, hey, just sell it and buy Bitcoin. And I said, assuming that they drive the price of Bitcoin up to 20 million of Bitcoin in the process, and they end up accumulating 25%, right, of the world's Bitcoin, right, 25% of the 21 million, the Social Security Trust Fund would have a $100 trillion reserve. Solves the problem. Right now, it's actuarially sound because we have 100 trillion worth of Bitcoin. Of course, the problem is you can't send those Bitcoin out to the people who are waiting for Social Security because the grocery stores don't want Bitcoin. So it's like, what are they going to do? And so I actually proposed a plan where the Social Security Trust Fund would actually keep buying Bitcoin with all the new tax revenue to support the price, but that then they would go and take their Bitcoin to the Federal Reserve that would then credit the U.S. government with dollars that it could use to make the Social Security payments. And I said, there you go. The whole problem is solved. And you would be amazed at how many people took me seriously. And oh yeah, Peter Schiff has come around. Great idea. I mean, they can't even see the sarcasm because that's how ridiculous it is. Because Senator Loomis and, they're saying we're going to pay off the national debt with all this Bitcoin. How are we going to pay off the debt? The minute we try to sell the Bitcoin, it's going to collapse, right? It would only go up because we were buying it. And that's why so many people are buying Bitcoin now. It's interesting that Bitcoin and gold are going in the opposite direction, right? Bitcoin's been going straight up ever since Trump won, and gold's been going straight down. Again, I've said this. Bitcoin is the anti-gold. It's not digital gold because it does the opposite of whatever gold does, because it's nothing like gold. It's not a safe haven. It's not a store of value. It's a speculative asset, and people are buying it because they're speculating on the asset going up, even though the fundamentals, if it was digital gold, if it really behaved and acted like gold, it should be going down like gold, but it's not, because it's based on just more buying and the bubble getting bigger as now the taxpayers are being dragged into it, right, without any say in the matter, so that they could be left as the final bag holders. But what's driving the narrative, and you can read this in online, because there's a lot of explanations, like, why is this happening? Why are interest rates rising? Why is the dollar rising? Why is gold falling? Right? And the reason is they're saying that the markets believe that this strong economy that Trump inherited from Biden is just going to get even stronger with these tax cuts. And that as a result of this, extra GDP growth generated by the tax cuts, the Fed is not going to be able to cut rates as much as we thought. And therefore, we're going to get tighter monetary policy. And that tighter monetary policy is why interest rates are rising long term, because we're not going to get the cuts. And that's why the dollar is going up, because other countries that have weak economies, they're going to be cutting rates. But America, with a strong economy, we're going to be raising rates, so that divergence between yields in the U.S. and yields in Europe, for example, is going to widen, which is going to favor the dollar. And then the strong dollar and rising yields. Well, this is bad for gold. Now you throw in the U.S. government dumping their gold to pay for Bitcoin. And maybe people are thinking, oh, maybe all the other central banks that have been buying gold will start selling their gold so they can buy Bitcoin. It's a bit, it's a race to see who can have the most Bitcoin. I mean, that would be basically like the biggest loser, right? Whoever wins, whoever buys the most Bitcoin is the world's biggest loser. But anyway, that entire scenario about why rates are rising is bunk. They're rising, but not for the reasons that people think. And that's why the impact that they're having on the dollar and the gold market is wrong, and why it's just creating a better buying opportunity for people who actually understand what is going on. And I'm going to get to that at the other side of this break. So don't go anywhere. We'll be right back. A few decades ago, private citizens used to be largely that, private. What changed? The internet. Think about everything you've browsed, searched for, watched, or tweeted. Now imagine all that data being crawled, collected, and aggregated by data brokers into a permanent public record, your record. Having your private life exposed for others to see was once something only celebrities worried about. But in an era where everyone is online, everyone is a public figure. To keep my data private when I go online, I turn to ExpressVPN. ExpressVPN routes 100% of your traffic through secure, encrypted servers. ExpressVPN hides your IP status, making it extremely difficult for third parties to track your online activity. It's easy to use. Fire up the app, click one button to get protected. And it works on all your devices, phones, laptops, tablets, and more. So you can stay private on the go. I have it installed on all my devices and I use it constantly because I can change my IP address to a different state and get access to the content online that isn't available in Puerto Rico, including any NFL game, because I can tap into the local coverage by setting my VPN for the city where the game I want to watch is being played. So protect your online privacy today by visiting expressvpn.com/gold. That's expressvpn.com/gold, and you can get an extra 3 months free. That's expressvpn.com/gold. All right, so I'm going to debunk the idea that it's the strong economy that's what's driving all these markets. So first of all, Trump did not inherit a strong economy from Biden. If the economy was strong, Kamala Harris would have inherited it from him. The reason that Trump won is because the economy stinks. It's not strong, it's weak. The voters said as much when they, told people in the exit polls. And that's why I was so confident for so long that Trump would win, because I knew that the voters didn't want 4 more years of what they were experiencing, because they were not experiencing a strong economy. They're experiencing a weak economy where they're working 2 or 3 jobs and they still can't pay the bills. So they have record debt, right? So people were voting for change. So Trump is not starting with a strong economy. He's starting with a weak economy, and it's going to get weaker. It's not going to get stronger. It's going to get weaker. That's the trend. Now, we're going to get some tax cuts, but those tax cuts are not going to make the economy stronger. They're going to stimulate spending in most cases. But we're also going to have rising interest rates, which is going to weigh down the economy, because as long as the Fed is doing quantitative tightening and deficits are rising, interest rates are going to keep rising. I think we could rise up to 6% pretty easily on the 10-year. And that's going to put a lot of upward pressure on mortgage rates and all kinds of interest payments. That's going to be a drag on the economy. See, people who think we can have all this growth because the tax cuts are going to boost the economy are overlooking the impact of rising interest rates that are going to be exerting an opposite force on the same economy. So we're not going to get all this economic strength just because Americans spend more money. I mean, we spend plenty of borrowed money as it is. So I think the real reason that yields are rising is not because the economy is going to be stronger, but because the deficits are going to be bigger. That's the problem. Debt is going up. The Treasury is going to be selling more bonds. And so the price is going to go down. Plus, inflation is not going down. Look, we got the CPI numbers. And again, these are official numbers. CPI up 0.2% for October. But that's the same as the prior month. Didn't make any improvement, the year-over-year number was 2.6. The year-over-year number a month ago was 2.4. Now, the market's expected 2.6, but it's going in the wrong direction. What indication is there that 2.6 is going to go down to 2? There is none. In fact, it's more likely to go to 3 than it is 2. Ex food and energy, the core, which supposedly is more important, was up 0.3, the same as the prior month, no improvement. The same with the year-over-year core, up 3.3. That's supposedly what the Fed wants to get down to 2, and it's still above 3. And again, it's more likely to go to 4 than 2. In fact, we're closer to 4 than 2. So if the core year-over-year rate is closer to 4% than 2%, on what basis can the Fed claim that we're headed to 2% when it's more likely we're headed up to 4%? And in fact, if you look at one more thing. One of the big reasons that consumer prices weren't up a lot more was we, again, have a big drop in used car prices. We put out a really good article on that at Schiff Sovereign. If you haven't read it, you should read it. If you're not subscribing, go to Schiff Sovereign and sign up. But it was a great article pointing out how many things in the CPI were actually going up a lot more than the headline number. But it was really brought down by used cars. But used cars had gone way up, and now they're just kind of normalizing. But I think the drop in used cars is kind of coming to an end. And so we're not going to get that masking other items that have been going up in price beneath the surface. So it looks like, the CPI has bottomed, that it is headed higher. But if you look at the PPI, that was actually slightly hotter than expected because the prior month was revised up from no change to up 0.1. And the year over year for the prior month went from 1.8 to 1.9. And we got 2.2 for the current month, 0.2 month over month. And the core, right? This is supposedly more important, right? The core, strip out food and energy. The prior month was revised down from 0.2 to 0.1, but the current month jumped up to 0.3. And the year over year number, the prior month was revised from 3.2 to 3.3. And now the current month, October, went up to 3.5. So here we are, the core year-over-year CPI, where the Fed is confident that that's going down to 2, went from 3.2 to 3.5, right? Well, actually it went from 3.3 to 3.5, but we thought it was 3.2. Now we were told it was 3.3, and now we know, at least for now, that it's 3.5. So you have inflation that's not going anywhere near 2%. And what happens when you throw tax cuts into the mix and you get bigger deficits? Inflation is going up. So bigger deficits, higher inflation. That's why bond yields are rising. It's not because the economy is going to be stronger. Inflation is going to be stronger. Deficits are going to be bigger. Both are negative for bonds. Now, why is the dollar going up? Well, if the dollar is misinterpreted, these dollar traders are like, oh, bond prices are going up because the economy is going to be strong and the Fed's, not going to be cutting. They're buying the dollar. Oh, and by the way, the reason bonds are going up is not because the market expects fewer rate cuts, because more rate cuts, because rate cuts would actually hurt the bonds. The more the Fed cuts on the short end, the higher bond yields are going on the long end, because those cuts are inflationary and that directly impacts the long end. The only way the government can get the long end down is to go back to QE. But as long as they're not doing quantitative easing, long-term interest rates are rising. It would actually help long-term interest rates if the Fed hiked, because that would mean, we're fighting inflation. But they're not going to do that. So they're completely wrong about what's happening in the bond market. And then the decisions that are being made by foreign exchange traders are wrong too, because high inflation is going to be bad for the dollar because the Fed is not going to fight it. Yes, the Fed may not cut rates as much as the market expected, but the one thing they're not going to do is hike them. Powell is not going to surprise the markets by hiking interest rates, right? And imagine the reaction of Trump too if he did start hiking rates, but they're not going to do it, especially if the economic data starts to get worse, which it probably will, because I think they were hiding a lot of bad data, trying to make the economy look better to help elect Harris. And so now that Trump's in fact, once he becomes in, say, hey, let's dump some bad data out here to really, to make, why are we, trying to whitewash the economy? when we got Trump. So the Fed is going to be looking at weakening economic data and rising inflation at the same time. And remember, I went over on last week's podcast, the Fed has no plan for stagflation. We get a weakening economy and rising inflation, the Fed's got nothing, right? They're shooting blanks. But the one thing I know they're not going to do is fight inflation in a weak economy, because that's political suicide. So it's not going to happen. So that's not good for the dollar. It's bad for the dollar that we're going to have an accommodative Fed and falling real interest rates. Because if inflation keeps going up and the Fed doesn't hike, that means real interest rates are going down a lot more than people think. So this policy is going to be bad for the dollar, and it's going to be bullish for gold. Higher inflation that the Fed can't fight is bullish for gold. The only time higher inflation is bad for gold is if you think the Fed's going to successfully fight it with interest rates high enough to actually bring it down and give you a high positive real rate, which would make gold less attractive. But that's not going to happen. The Fed's not going to hike rates in line with the increase in inflation. Real yields are going to fall, and and gold's going to go up. Sorry about that. Hold on. So the whole narrative that this Trump trade is built on is false, right? We're not going to get that economic growth. Now, some of the mania has to do with the fact that people say, well, the deficits won't go up as much because we're really going to cut government spending. Because, now we've got the Department of Government Efficiency, DOGE. And this is the game changer. Elon Trump is, the richest man, the smartest man. He's going to figure out how to go after the waste, fraud, and abuse. And he's got Ramaswamy as his sidekick. So the two of these guys together, they're the game changer. Well, first of all, DOGE, the Department of Government Efficiency, is as big a joke as the Doge coin that Elon Musk pumped up and that this is named after. First of all, the Department of Government Efficiency, which would be an oxymoron if it was an actual department, is not a department. It's not part of the U.S. government. Elon Musk is not going to be the secretary of this non-existent department. What is the Department of Government Efficiency? It's basically like a private think tank where you have a couple of guys that are going to get together and maybe bring on some other guys, and they are going to come up with suggestions, recommendations on things that the government can cut, where it's wasting money, where it could be more efficient. Well, there's already dozens, at least, of think tanks that already do that. The 2025 project was a big issue during the campaign because the Democrats tried to pin it on Trump. Well, what's the 2025 project? I think it was the Heritage Foundation. It was a list of recommendations for how to make government more efficient, how to make government smaller. They identified, here's agencies and departments we can pare back. Here's some we can eliminate. We can cut down on government workforce, right? It was exactly what the Department of Government Efficiency is supposed to do. Well, how did Donald Trump react to the Project 2025? Oh, that's got nothing to do with me. I'm not, that's not me. I disavow that. I know nothing about that. No. He just ran away from that as far as he could. Why? Because he didn't want to be attached to any of the spending cuts that were recommended. You see, politicians are always willing to say, I'm against waste, fraud, and abuse. Well, who wouldn't? What politician is going to say, yeah, I'm for waste, fraud, and abuse? That's what I want. Let's have more fraud, more waste, and more abuse, right? So you don't lose any votes by coming out against all this bad stuff. The problem is, once it comes down to identifying exactly where the waste is, where the abuse is, where the fraud, that's when the politicians run away. Because now there's something tangible on the table that needs to be cut. And remember, every piece of pork in government was put there for a reason. Somebody is benefiting from that waste, fraud, and abuse. And somebody is going to lose if we get rid of it. And it's those losers that the politicians are afraid of. Nobody wants to take anything away from a voter. So that's why the Project 2025 plan not going anywhere. And that's why anything that comes out of the Department of Government Efficiency is dead on arrival. Because again, all they can do is make recommendations, and it's not up to the president. Again, everyone's talking about let's eliminate departments. Well, in order to eliminate a department, Congress has to vote to do it. The president can't just do it by executive order. Congress created these departments and agencies, and so Congress needs to abolish them. How are you going to get that? How are you going to get the Democrats on board? Because none of them are going to do it. I mean, they're going to be a wall of solidarity. Anything the Republicans try to cut, that's going to be their issue in the midterm. And they're going to be, we saved this agency. We saved this program. These mean, horrible Republicans wanted to throw grandma off the bus or whatever. They wanted to get rid of this or get rid of that, hurt kids, and we saved you, right? So that's number one. The Republicans know that this is going to be a big deal because the Republicans in Congress, they're up for re-election every 2 years. They don't want to face voters having to defend actual cuts to a particular program. So you're not going to get 98%. I mean, the Republicans did take the House now officially. It was still up in the air, but it looked, like they were going to get it when I did my last podcast. But you got to get like 98% of the House Republicans to vote for it. I mean, half of them are rhinos anyway. There's no way they're going to vote for this stuff. It's not going to happen. I mean, Ronald Reagan gave up. He actually campaigned to eliminate the Department of Education and the Department of Energy. And the Department of Energy was actually established by his predecessor, Jimmy Carter. So it had barely been there. You would figure that, hey, let's get rid of a department that we didn't even have, a few years ago. It's brand new. How big a constituency could it possibly have built up in a couple of years? Well, so much that Reagan gave up. He couldn't get rid of either of those departments. Reagan's gone, rest his soul. Those departments are still here. And Trump is not going to get rid of them either because the Congress is not going to vote. They're not going to get 60. I think we got 53 maybe senators, Republican senators. We don't have 60. And you're not even going to get all 53. You think Mitt Romney is going to vote? You got a lot of rhinos that are not going to vote. In fact, look at the new majority leader. He's a Mitch McConnell. He's not the guy that the Trump wanted, the MAGA reporters wanted, or even I would have wanted, or Rand Paul. No, we got a establishment guy who was the leader in the U.S. Senate. None of this stuff is going anywhere. Also, cutting government workers, right? Talk about, we're going to cut all these government workers. Oh, you're not. How are you going to do that? The civil service union is like the strongest union, government. You can't fire these people, even for cause. It's hard to fire them, right? So no one's getting fired from the government unless we eliminate the entire agency. Then, of course, then they wouldn't be there. That, right? If you eliminate their agency, I don't think they have to find another job for them. I think if their position is gone, but you can't just cut the job and say, hey, you're a waste. We're trying to streamline this. That's the whole point of these government jobs. They come with job security. You can't be fired when you get a government job. I mean, I don't like it, but that's the reality of these union contracts. So how would the government, even if Elon Musk identified a bunch of government workers that we can get rid of, if you actually want to get rid of them, you got to buy them out. You got to give them 2 years, 3 years severance, right? What's that going to cost? I mean, it's going to take a long time for that investment to pay off. And by the time it does, Trump will be out of office and they'll just hire a bunch more people back. The other way that you can shrink the workforce is through attrition, right? Because every year people retire, right? They get older or they quit. Maybe they find a real job and they actually quit their government job. So you don't have to replace them. And so that would shrink. But the savings that we're going to get are minimal from those cuts. So everybody that's thinking, oh, well, the deficit, yes, we're going to cut taxes, but we're going to cut spending because we're going to be efficient. No, it's not going to happen. Look, Donald Trump ran for office the first time promising to cut spending. He had a penny plan, 1 cent plan. He was going to cut 1 cent every year he was president out of the budget. Just a little. I'm not going to cut a lot. I'm going to cut 1 penny. He ended up adding 4 cents a year for the first 3 years. And then COVID hit. And then if you look at the entire 4-year period, he added 16 cents for every dollar of government spending. So he blew up the debt even before COVID. Then he blew it to smithereens. So it's the same Trump. Nothing has changed. So he's not all of a sudden this diehard libertarian who wants to dramatically shrink government. he sounded more that way because that's what he had to say to win votes. That's why he flip-flopped on Bitcoin. I don't think he had a change of heart. He thought it was a fraud. He thought it was a con. I think he was right. But that wasn't the way to get votes. The way you get votes is promise to set up a Bitcoin trust fund, a strategic reserve, and buy a bunch of Bitcoin to enrich all the crypto people. And by enriching the crypto people, and that's why they vote for you. And now they want to get compensated. He basically bought their vote by making these ridiculous promises. So, but he's the same guy, and so the idea that we're going to get all these cuts is just farcical. What we're going to get is more spending, tax cuts, bigger deficits, higher inflation, and a weaker economy all at the same time. That is good for gold, bad for the dollar, and bad for bonds. Anyway, got a quick commercial. We'll be right back, so stick around. When you think about businesses growing their sales beyond forecasts like Feastables by Mr. Beast, or even a legacy business like Mattel, sure, you think about a product with demand, a focused brand, and influence-driven marketing. But an often overlooked secret is actually the business behind the business that makes selling and, for the shoppers, buying simple. For millions of businesses, that business is Shopify. Nobody does selling better than Shopify, home of the #1 checkout on the planet, and the not-so-secret secret with Shop Pay that boosts conversions up to 50%, meaning way less abandoned carts and way more sales going. So if you're into growing your business, your commerce platform better be ready to sell wherever your customers are scrolling or strolling on the web, in your store, in their feed, and everywhere in between. Businesses that sell more sell on Shopify. What I love about Shopify is no matter how big you want to grow, Shopify gives you everything you need to take control and to take your business to the next level. Upgrade your business and get the same checkout that Mattel uses. Sign up for your 1-month trial period at shopify.com/gold. All lowercase. Go to shopify.com/gold to upgrade your selling today. Shopify.com/gold. Hey, so I meant to mention that one thing that derailed a bit off the Trump train this week was the overall stock market, which was down. The Dow Jones was down about 2% on the week. I think it finished today with about a 300-point drop. S&P down 1.4%. Russell 2000 down 1.5%. And the NASDAQ down 3.5%. So I think bond yields are finally starting to weigh on the stock market, with the exception of, the Trump stocks that go up, because of the Trump theme. Gold stocks, got hammered again with gold and silver down, and the Bitcoin ripping, because I do think too that a lot of the money that is coming out of gold, going into Bitcoin, is coming from gold. I think money that moved into MicroStrategy and into Bitcoin ETFs is coming out of gold stocks. Because after all, the government is saying we're going to buy Bitcoin and we're going to sell gold. So what do you want to do ahead of that? You want to get out of your gold now so you can buy it back when the government sells lower, and you want to buy your Bitcoin now so you can sell it to the government when the government pays higher prices to buy the Bitcoin. So that's what's going on. But, I think at the end of the day, Bitcoin is going to end up being the biggest bubble probably the world has ever seen, the biggest misallocation of resources the world has ever seen. It's not just the money that people are going to lose who bought it, or taxpayers who might get stuck holding the bag if we ever have that reserve, but it's all the money that's been wasted building up the infrastructure, and all the capital and all the human labor. It's probably the biggest misallocation of resources and the biggest financial bubble in history. And maybe there'll never be anything as bad as this. We'll see, or a greater example. But it's certainly gone on a long time. And a lot of people think, well, because it's gone on this long, well, Bitcoin is going to 1 million. It's going to 20 million. Maybe if the U.S. government commits to printing unlimited amounts of money to buy Bitcoin, maybe it will happen. But it'll also destroy the value of the dollar. We'll have hyperinflation. The dollar will be practically worthless. And so, Bitcoin will be $10 million, but so will a pack of chewing gum, right? So, it's not going to matter if we destroy the dollar completely just to use all of our money to buy Bitcoin. But I wanted to talk about something that would actually work. See, if Trump was really serious about shrinking government, he wouldn't just set up a fake committee for Elon Musk to task, right? There's one thing that he could actually do, and I wanted him to do it during his first term. And of course, it never even crossed his mind to do it or didn't indicate that he would. But it was the very basis for my 2010 Senate campaign. So when I ran for Senate, and I never made it out of the primary, my opponent, Linda McMahon, is going to have another government job because she and Vince are very friendly with, President Trump. But what I was saying when I was stumping on the campaign trail, the reason I wanted to go to Washington and be in the Senate was I wanted to be the guy who led the filibuster. And everybody knows how long I can talk, right? That's one of my talents is, to talk just on and on and on, extemporaneously. I don't need notes. So I'm the perfect guy to filibuster, right? Maybe not today. I'm having some problems with my voice, but normally, I could talk, right? Just wind me up and I'm on autopilot. So I wanted to be the filibuster to stop the increase in the national debt. That was my plan. Like a lot of people would say, I'm for a balanced budget amendment. I say, that's great. We're never going to get one. You're for something that's never going to happen. What I want to do is stop the debt ceiling from being raised because every year or two, they got to raise it. But if they don't raise it, then the budget has to be balanced immediately. The government doesn't have any money. So if the government is collecting $5 trillion in taxes and they're spending $7 trillion and you run up to the debt ceiling, they have to raise the debt ceiling to keep spending. If the debt ceiling doesn't go up, there's no more debt. If there's no more debt, there's no more money. So now Congress has no choice. They have to cut. They have to prioritize and cut something. And they go back to their constituents and say, look, we have no choice. We didn't want to cut this, but that asshole Peter Schiff filibustered the debt increase and it's his fault, but we got to cut this spending, right? I wanted to be that guy. Like, I didn't care. I was like, send me to Washington. That town will never be the same. I'm going to disrupt things. I'm going to shake things up. No one's going to like me being there, but I'm going to be doing what needs to be done. So I was willing to do it. Of course, I never made it there. So I couldn't follow up on my plan, but Trump could actually do it even better than me. See, if I was president, I could guarantee that pretty much. Because here's what Trump should say. Trump should say, you know what? I am not going to sign any increase in the debt ceiling. That's it. Bottom line. The buck stops with me. No increase. So you know what you better do? Start cutting spending. And if you want Elon Musk to help you, if you want Vivek Ramaswamy, they're there. They're going to help identify. But you guys better roll up your sleeves and you better cut some spending because I ain't signing a debt ceiling increase. That's what he would do if he was really serious. But he won't do that because he's not serious. He wants to talk about it, but he's not going to actually do that. Because now, if he were to do that, the only way the debt ceiling would go up would be overriding his veto. So you would need 2/3 of the House and Senate. So maybe there's enough Republicans in one of those bodies to prevent the override of the veto. So that is the only way. But nobody has the guts to do it. Nobody wants to bear responsibility for forcing these cuts. But if you really cared, if it's like, hey, this is my plan, I'm going to do it. But you're not going to hear that. It's going to be all kinds of talk, lip service. But we have had commissions, independent commissions with more authority than the Department of Government Efficiency. Real commissions, right? Funded by the government, not funded by privately, that have come up with all kinds of recommendations that are never followed, never adopted, because nobody wants to vote for them. And why bother? We'll just keep running up the debt. Look, it's $36 trillion. No problem. Everything's fine so far, right? Why should we worry? I even heard some talk that, and even I think it was Elon Musk was supporting this idea, and why this isn't hurting the dollar, it's amazing, but about saying, hey, we need to get rid of the Fed, which is, end the Fed, let's get rid of the Fed. But what they're saying is, let's get rid of the Fed and let's let the government do the Fed's job. I don't know if they mean Congress or the executive. They probably mean the Treasury, right? They're saying that, the Federal Reserve is unconstitutional, right? It's a private banking syndicate. Why are they in charge of our money? That can't be constitutional. We should have the government do it. Let's get rid of the Fed and let's let, Donald Trump decide what interest rates should be or how much quantitative easing we should do, which would be obviously a complete disaster if you believe in the fallacy that the Fed is independent. But it would certainly be less independent if the president was not only the commander in chief of the army, but the chairman of, the now government nationalized Federal Reserve. But the people who are saying the Federal Reserve is unconstitutional, they may be right, but for the wrong reason. Let me explain. And I've mentioned this on earlier podcasts, but I haven't talked about it maybe in years. But under the Constitution itself, the U.S. government is not authorized to print money. It is not something that they can do. Article 1, Section 8 is what lays out all the enumerated powers of the federal government. They have the power to coin money and regulate its value, right? And fix the standard of measures, units and measures. That's it. That's the only monetary authority they have. There's nothing in there that says they can print money. Now, they didn't really call it printing money back in, 1789 when they were ratifying the Constitution. They called it bills of credit. The reason they were bills of credit is because they were backed by real money. Nobody thought about just printing money backed by nothing. Nobody was that dumb to think you just print money and have nothing behind it. They were talking about the government printing money with gold behind it, right? And they didn't even want it to do that. They said, we don't want the U.S. government to print money, even if it's backed by gold. Now, when it comes to the states, Article 1, Section 10, they said no state shall coin money or emit bills of credit. So what does coin money mean? First of all, it means take money and make a coin out of it, right? We have a coin, like $1 or a quarter, right? That's a coin. So the federal government at the mint is allowed to take money and coin it. But what's money? Because Article 1, Section 8 doesn't say what money is, that the government to declare money. In fact, the government is not authorized to make anything legal tender. So they don't have the power. Remember, the way the Constitution is written, the federal government only can do what the framers wrote in the Constitution it can do. So if they didn't say that the federal government can make something legal tender, well, they can't. All they can do is coin money. That's it. They can't print money. They can just coin it. But what is it? Well, the money is defined in Article 1, Section 10. It says no state shall make anything but gold and silver coin legal tender of payment of debt. That's it. So the only thing that states can make legal tender is gold and silver. And the federal government can't make anything legal tender. So what's legal tender? Gold and silver. What can the government coin? Gold and silver. That's what they can coin. And now the states can make it legal tender. Now, they did coin pennies and nickels too to make these smaller coins, right? But they weren't legal tender. So the states couldn't require you to pay your bills in pennies, right? People used pennies, but they weren't legal tender, right? If you owed somebody $10,000, you couldn't just give him 10,000 pennies. He could refuse to accept that. That's not legal tender. I want gold or silver, right? You had to pay gold and silver. But the government coined nickels and pennies for convenience sake. So there is no constitutional authority for the federal government to print money. Now, they did print money for the first time during the Civil War. And it was challenged. They said, hey, this is unconstitutional. You can't do this. Oh, by the way, the first draft or two of the Constitution, in Article 1, Section 8, it actually said Congress shall have the power to coin money and emit bills of credit. But they voted to take that out. I think it was 9-2 or something. They said, hey, well, we don't want this. Let's get rid of it. So it was gone. So they deliberately took out the authority. So anybody who says that coining money means they can print money, no, they can't. They needed to have bills of credit, and they didn't have that power. And if coining money meant emitting bills of credit, they wouldn't have had to deny it to the states twice. If saying no state should coin money included bills of credit, they could have left it out. The reason they had to put both in is because they're very different. And the only one that the federal government can do is coin money, and nobody can emit bills of credit. Now, when the federal government did it during the Civil War, they issued greenbacks, which were paper money backed by gold, of course. Nobody would have thought to issue it backed by nothing, right? Like we do now. But they said, hey, is this constitutional? And there was a number of legal tender cases, Knox versus Lee, Hepburn versus Griswold. Forget them all. I've read them all in the past. But if you go back at these cases and you look at it, because now they say, hey, it's constitutional to have paper money. No, the government didn't point to Article 1, Section 8 to say, look, we have the power to emit bills of credit in Article 1, Section 8. They went to the necessary and proper clause and said it was a war. And so it was necessary and proper to save the Union during a war. We couldn't raise taxes. We had to print this money. We had to issue debt to pay for the war. It was an emergency. And so because it was emergency, we could do this. There has never been a court that said they could have done that in peacetime. Now, there were some other legal tender cases because what happened was people started to redeem their notes and the government then reissued the same notes, right, after they were redeemed. So they were already printed. So somebody came in and got their money and the government reissued it. And so somebody challenged that and said, look, the war is over. You can't reissue those notes. It's not an emergency anymore. And the court, I think a bad decision said, look, if the notes are already there, they're there, right? They don't have to retire them. But they can't issue any new ones. There has never been a Supreme Court decision that says the federal government in peacetime can issue bills of credit. And of course, there's never been a Supreme Court decision that says they could just print money with nothing behind it. Credit means we owe something. A bill of credit means a piece of paper that's an IOU that represents an obligation to pay something. Now, let me go to the Federal Reserve, which is why I started this conversation. Why do we have the Federal Reserve? Well, one of the reasons is because the Federal Reserve is not the government. It's a private banking syndicate. So they can issue bills of credit because they're not the U.S. government. So it would be unconstitutional. The people say, oh, we should have the federal government print the money instead. No, that would be completely unconstitutional because it's clear the federal government can't do that. Now, the reason I think the Federal Reserve is likely unconstitutional is because the government tried to get around the Constitution by creating the Fed. Said, oh, look, we're not doing it, right? The Fed is doing it. They're totally independent. Well, BS, they're not totally independent. They're really beholden. The reason the Fed has to be independent is not because the guys that drafted the Federal Reserve Act thought, hey, it's a good idea to have an independent Federal Reserve. Like it's better for policy as a check on the government. No, it had to be independent because if it wasn't independent, the whole thing was unconstitutional. That is the reason. It would be unconstitutional for Congress to do it, but I think it's unconstitutional to do it indirectly. And of course, when the Federal Reserve Act was upheld as constitutional, it was when Federal Reserve notes were real notes, obligations of the Federal Reserve to pay lawful money, gold and silver coin minted by the U.S. government. So initially, they were legitimate, but now they're irredeemable. So there's never been a court that has held that irredeemable notes issued by a private banking syndicate during peacetime are constitutional. Now, I don't think any judge 100 years ago would have ruled it that way. Who knows what the justices would do now? But I just thought it was ironic that they're saying, oh, no, it's the Federal Reserve is unconstitutional. Let's let the government do it. No, if the government did it, then it would really be unconstitutional. It's much better to have the Fed. And yes, it is better to have some independence, even if it's just a veneer, right? I mean, a little bit. Could you imagine what Donald Trump would have done if he had his hand on the printing press during his first term when he was beating up Powell, demanding rate cuts, more QE, negative interest rates? At least he didn't get it, right? But obviously, had he been able to do that, it may have been a lot worse. Anyway, that's it for today's podcast. Again, I want to remind everybody to put a comment on this podcast. Let me know if you like it with the thumbs up. Share it with your friends. I think it's important, again, to get this information out there. Look, I supported Trump. I even voted for him, though it was a waste. I believe in the concepts of small government and sound money and all this stuff. Unfortunately, we're not going to get that. And we got to have the truth come out because believe me, when things get worse, when it doesn't go as promised, when the public is disappointed, who are they going to blame? They're going to blame the free market advocates. They're going to blame the libertarians. Hey, you told us this. You promised us this. You were wrong. We need more government. There got to be people from this camp who can stand up and tell the truth. I've seen this before. I know how it ends, and I know what the economy really needs. It doesn't need another sugar high. That's not going to work. That's why the economy is so screwed up, because we've had too much government stimulus. We don't need more. We need to reverse the policies that made us this sick, not double down on them. You know, the economy actually got worse when Trump was president. People don't realize that because we were looking at fake numbers. And it continued to get worse under Biden. And what I'm afraid of is who's going to follow Trump, because it could be somebody way to the left of anybody who we're talking about now. I mean, could it be like an AOC or who knows, could come in and be the change candidate when we have $50 trillion in debt? Who knows how high the inflation rate is going to be by then? Who knows, how weak the economy is going to be? So I think it's important that people from this side of the aisle level with the public so we have credibility, right? Because all the people that were just cheerleading this nonsense, they won't have any credibility whatsoever, right? They're going to be able to be criticized and blamed. But I think me and whoever else is like me, we will be able to help, bring rational perspective into it and actually explain, no, we did the wrong thing. We didn't do what free market advocates really want. This isn't Austrian school economics. This is the same old thing, just in a different wrapper. And unfortunately, the public bought it. That's it. Well, bye for now. Have a great weekend, everybody. And I will be in New Orleans for the Gold Conference next week, later in the week. So I'm looking forward. We do have a booth there. We got a couple of the reps from Puerto Rico who are coming to New Orleans, as well as Adrian Day, who manages my gold fund. It's going to be a very interesting conference because, after all, we are much, much higher in the price of gold than we were a year ago when I was there. But now we're experiencing maybe the first significant correction, and we've got, fresh off the Trump win. So it should be a very interesting and exciting conference, and I'm looking forward to spending some time in one of my favorite cities to spend time in, New Orleans. So bye for now.